Cody Davis on, and we got Ray joining us today. So this should be a fun one. But quickly, are you guys both happy? Seattle, you guys are both in the Pacific Northwest, so Seattle's going to be in the Super Bowl. You guys happy about
Yeah.
that, or don't even care?
Oh yeah, I just learned about that right now.
All right. Let's kick it off though. So yeah, we're gonna what I like to do on Mondays is kind of go over some of Cody's regular videos that he puts out on Tuesday and Thursdays. They're on the shorter side, but they're a lot of great information, so we can dig into those, right? Ray, did you get a chance to take a peek at? I know I sent them to you last minute, but did you get a chance
Yeah.
to take a peek? All right. Is there anyone you want to touch on first, or I know the title says about being bankable somewhat, but was there one you want to touch on a little bit?
Whichever one you guys are down with,
All right. Well, Cody, give us your thoughts. Like I said, where does all these videos do they just come to you and you just record right there? Or you kind of plan them out, or but what was your thoughts behind these past two videos you put out?
I just film them whenever I think about it. So I filmed tomorrow's video like 10 minutes ago because it's a 4-minute video, 5-minute video. But that one was about doing taxes because this is the first time I'm doing taxes after a full year of being out of all those partnerships. Because if, let's say, you sell out of a partnership halfway through the year, you still have to file a partnership return. So now I've got a full year without any of that stuff, and my taxes are so much simpler. So that was an unexpected takeaway. So I literally just filmed it. It gets posted tomorrow. No edits, no thought. Just what I thought of this morning. So I filmed it while I was thinking about it. The last videos, I mean, shoot, what were even the titles? Those titles were
Yeah. So the titles were "Acting on a Dream" and
Yeah.
"Your Time in Business." Yeah.
Yeah. So there's some development stuff I'm working on, and that one big parcel of land that I showed in that video, a buddy of mine actually bought that. And you look at the Google Maps view, it doesn't show anything there. And now there's over 100 townhomes. There's commercial building on that lot. They're doing some more development. There's going to be a hotel, potentially Starbucks. Like, there's a whole bunch going in. And it took a guy, and it could have been anybody, but in this situation, it was a guy that had a vision, decided to figure out how to finance the vision, and worked his way through it one building at a time. And the whole thing's going to get developed just because some person had a dream. And the thought was, in that video, there are people that are driving by that, thousands of people that drive by it every single day, see it. Investors see it, builders see it, and nobody did anything with it. So just being willing to take action and actually act on your dream and not just have a dream separates the people that get what they want when they want and everyone else who doesn't. So I really wanted to put that together when I was there because I'm starting to buy those up. I didn't have the dream of starting that, but I believe I can finish it. And so I'm working on buying up all those 7plexes right now, all the townhomes. And as they continue to build them, there's going to be probably 185, 190 something townhomes at an average rent of $1,800 to $2,000 a month. So like that could be a legacy property. So that's going to be part of my dream now is figuring out what actions do I have to take to own that whole thing. And it all started with someone else saying, I'm going to turn that dirt into something. So that was pretty fun.
I quickly forgot. It's been a while, maybe since Ray's been on. So quickly, Ray, give us 60-second spiel on who you are. It seems like everyone knows you're in the Pacific Northwest. But what do you invest in, and where are you at?
Yeah. So my name is Ray. I own a photo and video production company. I started back in 2014. Essentially, I've been working on my own, having my own business, controlling my time since then. And I also invest here in Washington State. I own 4 units, and one of them is a house hack. I own one property in Michigan where I did a subject to with it's kind of subject to seller finance deal. And yeah, my goal with real estate is essentially to live a life. I'm not really much for owning about like hundreds of doors. That's not what's important to me. I've been fortunate enough to control my time. So I think if you can get to a place where how should I say this? If you can get to a place where you have enough passive income and still do what you love, I think it'll increase what you love doing to be even better, right? So that's why I do what I do, and I really resonate with people who use real estate to essentially get to do what the things that they want to do. And I love hearing those stories, and that's what motivates me.
Very cool. So Cody and Ray, have you guys connected before outside of this live stream?
Yeah, we've
Yeah.
connected.
Yeah.
All right, cool. Yeah, like I said, I always more amazed also not only on the topics you come up with, Cody, but just I think to Hyder's point, like Simon UE says, when you know the material so well, it's easy to ramble in front of the camera with no plan. And I think that's why it's so easy for you to just pick it up, put out a topic. But what I like is they're kind of on the shorter side, but so you don't get too in depth, but then it just starts making you think, kind of what your vision, what your personal goals are. So I think even the bankability side, I think everyone knows your journey, right? It's been most of your stuff was seller finance in the beginning, and only recently you started getting more bank loans and things like that, right? So I think the question for a lot of people always is, do you think maybe the way you started was the easiest way to go about it, or
No.
just like
My very first mentor ever, not going to name names because we're not close anymore, but he always told me, Cody, I do everything the hard way. And you can do the same or you can do it the right way. And I ended up doing it how he did it, but I did it for a different asset class. So he had done it for condos, he had done it for commercial. I did the hard way for apartments. And because I did it hard on the front end, it was easy on the back end, is the way I like to think about it. So I figured out how to do these debt structures. And so now structuring debt is a lot easier because when I'm talking to bankers, I understand what a rate factor is. I understand debt coverage ratios. I understand how to make any debt product positive or negative leverage. I wouldn't have done that if I had just started with bank because I would have been either fitting their box or not. I had to make it work. But it was very hard on the front end because I didn't know any of that stuff. And I was still, if I was going to buy it, I was expected to be able to make it work. So I wouldn't necessarily recommend doing it the way I did it. But if you figure it out, that's the thing the entrepreneur has to do. It's very rewarding on the other side. It's just like you're going to be hitting your head against a wall for years. And that's what I did.
And then Ray, for you, your journey, has it been a pretty easy path for yourself? Or, I mean, did you get into real estate first or the business side of things?
Definitely the business side of things. I worked a W-2 for a long time. I was in sales for most of my life, right? Commission-based sales. And anybody who knows that, it's one of those keep what you kill kind of situations, and you got to learn quickly. And I think the biggest thing was I realized, just like everybody, right? They find out that corporate America is not really in there for your best interests. And once I kind of realized that about myself, I really went all in. And just like with most entrepreneurs, you start with one business idea and it doesn't really work. So I had multiple businesses in the beginning, right? Until I found something that really resonated with me, that gave me a lot of love and passion for it. And once you really find that, and you're fortunate enough to find something you're passionate about, it doesn't really feel like work. So I found myself working an 8-hour day, and sometimes you're awake until 2 o'clock in the morning and you don't even realize it. And then you realize you did it for about 4 or 5 years, and you're 4 or 5 years in. And that's why I always feel like if you're able to find something that you could resonate with, it makes the journey just even more fun. You know what I'm saying?
Yeah, I think the one thing also I want to touch on, Ray, is it seems like you have the business side. It seems like a passion for you, right? The photography and whatnot, but it also seems that you found a new passion in real estate, right? I think we probably connected, what, 4 or 5 years ago, maybe. I mean, I think you reached out, we talked, and I don't think at that time you were doing this strategy, but right now you have really found a new passion that everyone seems to be talking about it is dead, right? But you seem to be doing well in it, right? And you want to touch on that a little bit also, and even from a bankability side, like how do you get funding for these type of properties that you're investing in?
Yeah. So, exactly like you said, I was fortunate enough to be capturing real estate inside because I had a portrait company where I'd shoot destination weddings, travel, and kind of do all that stuff. But I was also shooting real estate, and I had already owned real estate, and I was kind of doing that in parallel with my business. And one of the things that all of us investors have, we all have that edge, that competitive edge that everybody gets, right? And my competitive edge was I'm in photo and video production, and I'm related and close to a lot of flippers, people that are developing, real estate agents, what I'm saying, co-hosters in the Airbnb space. So I get to witness a lot of cool different strategies, right? And not only do I get to just, witness it, I get to ask these questions when I'm capturing these properties to these investors. And what I realized was short-term rental was a great way to utilize the skills that I built and the network that I built to find real success in it, right? So for me, I really resonate with STR because I'm already an entrepreneur. I've owned businesses, I run businesses, so that's what STRs are, right? So where somebody might find that a little difficult, I actually find STRs to be more on the simpler side, you know? And also the fact that I can use my creativity to give me the competitive edge and ask my network, for a little bit of help where I need it. I think that's why I'm finding so much success in it.
And if anyone that was in the school community yesterday, we had Rich Sommers on talking about boutique hotels. So for you, is that something you think you'll be looking into in the future, or?
Yeah, like it's not personally me that would be running a boutique hotel or anything like that, but like I said, I'm really close. Like Chris and we're very passionate individuals. And for those people who don't know Chris, we run the Saturday calls on the ORAT school community. And Chris is definitely like how I'm passionate about photo and video production. He is the same way with running SDRs, right? And when you've put two passionate people who are big dreamers together, that's that's where you become unstoppable, right? Because we're not doing it for just the cash. We're doing it for the love of the game. We're doing it to enhance, just the overall industry and what we want to do to be a part of it, right? So, yeah, like the boutique hotels is going to be essentially a partnership with other co-hosters who are, I guess we just say, who think the same, who are like-minded, who don't want to half-ass things, but want to take things to the next level.
Nice. And for you, Cody, I know your portfolio is kind of transitioning a little bit, right? So I don't know, but is Airbnb, boutique hotels, anything on in your future, you think? No?
No, not at all. I've been there, done that. I know when I'm defeated, I don't need to. I don't need to get defeated again.
Oh, that's right. Yeah, you had the Robin Hood, right? So
Well, it was fine, but again, like I was mentioning earlier, when you start out and you do things the hard way, you make a lot of mistakes. And so one of my biggest yet mistakes was how I did the Robin Hood. That was probably the biggest. It had a long-term balloon, a fixed interest rate, but it had a additional down payment every year of $225,000. Didn't work. In the beginning, I was of the mindset that, oh, we can make it work. We can make more money. We can always make more money. And this property's underperforming. The current owner doesn't know what they're doing. That's not usually the case. Usually the owner of 20 years knows what they're doing. So I was naive. That's what killed that deal. The actual asset class is not the problem. But you do have to have an operator on the team. And unlike Ray, I don't find that business simple. I'm glad he does. 'Cause someone has to. Otherwise, we're not going to have any Airbnbs out there. Because I'll just stick with apartments, is all I can say. I've had the opportunity to get into 100% seller financed storage facilities. I've had the opportunity to get into land development, zero down, and I just want to stick with apartments for right now.
Can I elaborate on why why I think it comes easier to me running on a short term rental? Because I know there's a lot of people who maybe is thinking about STRs but are afraid, because I was the same way, because I was operating a lot just more long term rentals. And I think the reason why I found it to be simpler is, when you're running a business, you're generally having to create your own SOPs, right? You're having to build it, you're having to learn it, and then you have to you have to optimize it year over year. And when you get into the Airbnb game, really, it's all set up for you, right? For the most part, you got to get the people that you need, like your cleaners and all the people that are going to maintain your property. But the overall business, I would say a good 90% is done, and that is why I feel it's a lot more attainable, I guess, in my eyes. You know what I mean?
Yeah, that's the funny thing that Cody brought up about you, Ray saying that you find Airbnbs easy, somewhat. And I think a lot of people um not get frustrated, but when they hear you say something like that, they think you're like the outlier, right? They're just like, what is Ray talking about? Like Airbnbs are horrible. I can't make it work, or it's so difficult, right? But I mean, is it are you doing anything different, you think, than these other people are doing? Or
No, just like how could I compare? I love like using analogies, okay? Like when you go to the gym, right? You get calluses on your fingers, right? I have been in business for so long. The kind of calluses I have in my brain and the kind of stress levels that I'm able to deal with, right? Because when you just imagine somebody leaving your full-time job, right? I did that like a decade ago, right? So for me, the calluses in my brain and what's hard is not the same, I would say, as most people, right? And I've been like, when you guys are talking about bankability, right? I bought houses utilizing my business as the income to do it conventionally, right? And think about doing that, leaving your W 2, having a mortgage, having a family, having bills, and the stresses of all of it, and then me getting into STR and being like, okay, like what I mean? Like it's it's not that difficult in my eyes, right? And I feel it's the same, and I think it's through the experiences I've been through is the reason why I feel like that.
Ray brings up bankability again, and I think he talks about using his business to leverage of that. But like for you, Cody, I think they said everything was seller finance initially. That first attempt to get a bank loan for you or for a property, I mean, how much did you learn on that first experience?
The first one was hard, and the reason my first one was hard is because I was starting to borrow from the bank when rates went up. So all that easy money was gone. And like, if you think about a timeline, I had a loan. My first loan, by the way, was 1,925,000. That was my first ever bank loan. I had terms that were locked, underwritten, signed by the borrower, countersigned by, I think it was the VP, the lender, and we were on closing day. 4.625% interest only. Interest only was for a few years, but it was a 10-year lock. Great debt terms. The lender didn't fund it. Later find out the reason they didn't fund it is because rates were shooting up like crazy and nothing I could do. So my next loan, which I closed shortly thereafter, they offered to refund the loan in the sixes. My next loan was at like 6.25% interest, 30-year AM. So my payment had gone up dramatically because not only did it jump 1.5% on almost $2 million, but it went from interest only to 30-year AM. And that was on a value add deal. So the cash flow was really important to me. It was a very interesting learning experience. You can do everything right, and someone else doesn't do something, and then it's done. Like you don't get the end product. But eventually got it done. And what I learned in the process is that if you have consistent cash flow on your rental and you have a few months reserves, you can get a bank loan. I mean, it's not that hard. And if you don't have it, you bring in someone that does have that, and you have a deal that has consistent cash flow, and it's really easy to get a bank loan. And I had a limiting belief. You'll look back and I'll say, I'm doing it seller financed all the way because I don't qualify. And there were some lenders that interviewed me on podcasts, and they're like, what do you mean you don't qualify? And I just kept saying I don't qualify because that was the brand, and that was stupid. My first one was hard because I didn't know what I was doing. But if I just knew I just had to show consistent cash flow and a little bit of money in the bank, it would have been so much easier.
It's funny you mentioned that, because I think I've met a few people that have been investing for, probably 10 years or so. And yeah, they don't realize that there is products that may fit, their work history or whatnot, right? So that's the one thing I think a lot of people don't realize. There are products out there, but you have to be in these communities or different communities and find different lenders, or always be talking to people. I think what I don't know if it's one of the 7 rules, but it's maybe meet 4 new people a week, or talk to 4 new people a week, right? So whether it's a lender, a realtor, another investor, but just talking to people, you're always picking up little tidbits here and there, right?
Yeah.
But Trade Better 99 Harrison says, Ray, do you think you have a certain demographic locked in for your STRs?
I think for each location is totally different. My Michigan property tends to be, I thought it was going to be a lot of working professionals because it's over there. It's like 10, 12 minutes away from Grand Rapids, and they have what's called the medical mile over there. So I thought that would be my demographic. But as we've seen, it's a lot more families, a lot more kids, sports, stuff like that. But it's great because they're staying for 5-7 days at a time. And those are the kind of stays that I want. But I've really honed into making sure I have cribs and stuff like that, because that's the type of people that I'm getting in Michigan. Now over here in the Puyallup area where my house is, we're right next to the fair, so we're getting a lot of people with dogs, and we're getting a lot of people who just love the theme that I put out, right? I got a whole bar situation down there, pool table, everything. So I think since I really designed that space, I think I'm getting more of the younger crowd who are wanting some experience with their stay.
I just want to remind everyone, Cody's also live streaming at the same time right now. So go check out his channel, subscribe, hit the like button, comment also if you can. There's Ray's channel. I don't believe Ray got his channel hooked up in time, but we'll get Ray's channel moving on there. Hey, Gus is here. Morning, Gus. Gus was on with me yesterday. Gus has been bringing on some wonderful guests. We've been live streaming on Sundays together. So that was another fun one yesterday with Dan Barrero. So go check that one out. Last week we had Welby Aselli on. That was a lot of fun also. But Cody, yeah, to that point, Ray's mentioning his business. Kind of finding out about different lending products. But your other video was talking about your time in business and quick wins, right? So what was that video kind of touching on?
Well, it's just managing your expectations. And if I remember correctly, because again, I just record, it's one and done. The thought is setting up your wins so that you can move more efficiently. And I believe it was on the banking note of figuring out what a banker's going to want from you so that you can move more efficient. I just got a loan on a property that I would not have qualified for a commercial loan or residential loan, and I qualified without really a whole lot of effort. Like the DSCR products out there are pretty cool, and asking professionals, what would it take to be able to do this? It allows you to get some short-term wins and some long-term wins. That was a cash out refi to get some liquidity and buy out some partners. I believe the video was along those lines.
So Ray, also for you, I mean, I don't know, is there any specific bank type products, lending products for like short-term rentals, that space?
Nothing like for me, like since I've had businesses, right? You got your line of credits and stuff like that. You have your business credit cards. And I've always been like the kind of person who've always called in to kind of max out, right? I don't think I have a credit card under 50,000. You know what I mean? So I think I don't know. I always kind of put a credit. I always try to ask for limits, just because I always felt like maybe in the future it would be a good idea, you know. And since I have my business income, my wife and I's things, it's been really easy for us to increase our credit lines. Not that we use those credit lines, but I feel like it gives me flexibility, right? Like I remember I get offers for 0% credit cards for like 17K, right? Like I don't think I would have been able to get those kind of 0% credit lines if I didn't have such a great credit limits.
You know, the so like Cody brought up DSCR lending also, and they usually base it off the rent, right, to the asset. Do short-term rentals, are you able to use the short-term rental rent rates, or it has to be the long-term rental rates when you factor in for the DSR ratio?
That I'm not sure of. I mean, there's a product for almost anything. And not on the short-term rental note, but I've seen DSCR loans that will allow you to do conversions from residential to adult family home. So they can factor for that, for some renovation and the pro forma income. There's some pretty crazy products out there, so I wouldn't be surprised if they could use the trailing months of Airbnb. But I haven't done that. I would just stick to strictly long-term.
Ray, do you know if any of DSCR type stuff you can use the Airbnb rates, I guess?
No, like honestly, I've been kind of curious about that, right? Because with uh with the conventional way of doing things, right? You start maxing out your DTI and stuff like that. So like I've never really explored it because I've either gone conventional, or my most recent deal I did a subject to kind of situation. So and these are the kind of things I'd love to ask experienced investors like you guys, right? Where I have tons of equity in my properties, and I'm more now that I've just been buying these houses, and I have my business going. I'm a little bit. I need a break. You know what I mean? Like in the last, I'd say 3 years, I've just been a house every year, and for me, that's a lot, right? For Cody, that's probably nothing.
No,
But like,
I mean, a property every year is a big deal. Most
yeah,
people never get one property, so like don't downplay it.
yeah,
We're just buying different stuff.
yeah. And I think my biggest thing is I want to be able to pace myself, right? Like I really want, just like I'm so used to loving what I do, that when I did the Michigan property and it was like a full gut job, it just took a lot out of me, right? And and I'm in a fortunate position now where I can take my time, and I want to enjoy doing the kind of investments that I want to do. And at the beginning, when you're first starting out in your investment journey, it's literally just put your head down, one foot in front of the other, and you don't even go up for air. You know what I mean? And it's exhausting. And I feel now my next investment, I want it to be something that I'm enjoying the ride all the way through from beginning to end. And I think that's going to be more fun for me. It's going to be I guess more sustainable, and yeah, and I'm in a fortunate place that I can do that now.
Yes, I think some lenders, there's products out there that use AirDNA for the Airbnb or short-term rental comps, and that's how they base the DSCR off. And that's what Brady is saying. Yes, there are short-term rental DSCR loans. So yeah, so like I said, you just gotta find the right lender, and a lot of them use the AirDNA data to use that information. I see Harrison tuning in from Cody's channel. He says, "Keep up the great work, Cody. What is the most important feature you look for in a property manager?
They should own the type of asset that you are putting into business with them, and not just one. If you have single family rentals, they shouldn't just own one. I want my property manager to own a bunch of apartments. And the local property management companies here in town where I live, there's only a couple management companies where the owners actually own apartments or have owned apartments. And some of them have owned apartments longer than I've been alive. And so I'd rather manage with them than manage with someone who manages storage or owns storage or single family or doesn't own anything. And why would you want to ever do business with someone who doesn't do what they preach? That would be ridiculous. So like I wouldn't want to go skydiving with someone who's never done it. I don't want them strapped to my back. So I don't want to have my properties at the whim of someone who doesn't really understand what that extra $300 amounts to. They're like, well, let's just get rented for $1,500. It's better to be full where it should have been 18. Like that adds up, especially on apartments. And I'm seeing that right now. There's a bunch of sevenplexes. There's another management company in town. They're charging $1,550 for a 3-bed, where I get $1,800 for a 2-bed. Like less than 100 feet away, identical product. It's crazy.
Alex, the accidental investor, who's also in the Pacific Northwest, says design, build to rent STR. I think is that he's saying that's what his motto is for this year, maybe.
Cool.
Can I just add, like, Alex and I, we just had my wife and I just had dinner with them just this weekend.
Oh, that's right. I saw that.
Yeah. So we literally talked for 3 hours straight. It was just so much fun because, it was just talking about what our goals were with real estate, right? And his goals are definitely different from what our life, what we want to do. But it was just cool to kind of share our ideas and what his strategies were. And he's doing such awesome things, right? Very, very motivated. And I can definitely see this guy buying like a couple more houses this year. He's definitely fired up.
Nice. So Brady Morgan, who's in Wyoming, who has a good YouTube channel. I'll put it in the chat shortly. He also just came out with a book, Never Sell. So go check that out on Amazon. But he says, I have mentioned it before, but barndominium build with indoor pickleball court, one of the best performing STRs in my town.
Oh, wow. That's cool.
But the one thing I really like, I pick up from both of you, Cody and Ray, is how do you folks train yourself to see opportunity instead of problems? So Cody, maybe you can go first.
Well, I'm just looking for things that are broken. So as an example, something that was in plain sight that nobody did. There's a bunch of side-by-side townhomes where I'm buying, where I'm trying to buy all those sevenplexes. Not a single person put up a sign. Nobody branded any of it. And in a business, Ray will know this, if you don't market, if you don't connect with people, you don't have a business. If Ray didn't put himself out there, nobody's going to work with him. No one's going to know he does anything. So that's why it was important in the beginning to say, this is what I do. Well, why would you build 100 townhomes and not market? No one had a phone number. No one had a sign. And so what I figured is that any business needs to market. Most properties don't have a sign. I'm going to buy a sign. And I spent $3,000. I made a Google web page. I branded the whole complex. So instead of it just being the townhomes on Marina, now it's Marina Shore Villas because we're on the shoreline. There's water right across the street. And now I get the shared authority of 100 and something townhomes when I only own 7. I mean, how do you do a value add on brand new stuff? I guess you just market it better, right? You got to figure out what's missing in the business. And if you break down any business, there's always going to be something missing. It could be marketing. It could be product quality. It could be the management. If you have a bad manager that's renting your townhomes for $1,500 when it should be $1,900, tenants are going to be happy, but that doesn't really help them in the long term because they don't keep up with where the market's at. Then they get sticker shock when they have to move. So figuring out what's broken. And again, that's the question of, well, how could I improve this? And I just try and write it out. It's like, what could I do to make this better? Even if it seems like it's a perfect business, because it's never a perfect business with real estate.
Before Ray answers this, I do want to. So Brandon, who I'll be on with tomorrow, my Tuesday regular guest, building wealth flow. Now, not build to rent anymore, but building wealth flow says, yes, I agree. Firsthand knowledge for a PM with their own personal experience. They handle things differently. So yes, Brandon also has a property management company out in Texas. So yes, I agree with that. And Zach Shepard, I believe this was Zach who was on my channel before. He's in Virginia. He knows Chris Webb, but he says, I do DSCRs on vacant rentals frequently. And I know you could do a DSCR and a vacant Airbnb, and they use long-term rental comps to underwrite it as long as there's income. Yeah, so I think what we're talking about, if some lenders use the actual short-term rental income as the comp to qualify for the lending for the property. But Ray, what about you? Like, how do you see opportunity? That's, like I said, that's what I love about you and Cody. I feel like you guys see opportunity in a lot of things when people are looking at the negatives, maybe.
Yeah, for me, man, like, since I was in sales most of my life, I've become a very good listener. You know what I mean? Well, most opportunities will present themselves if you're just listening. And I'll give you some examples, right? When I first started my business, I would always kind of pitch my product, right? I'd like, hey, take a look how good my photos are, whatever, right? And then I realized once you really understand your business and your confidence is there, it's your system and how you do things that impress people. It's not the work, right? They understand because they can hear the wisdom in your experience, and that is what's closing them. So what I do now is when I'm around just anybody that I'm working with, I just listen to their problems, and I see if I know somebody, or I'm in connection, or if my business can solve their issues. But literally, it's mostly just listening and really paying attention. And that's how I find a lot of these opportunities.
Josh Burdick says, totally agree. Branding is huge. And then Yasik, yes, Yasik says, both personal or business, we are either growing or dying. There's no in between. Yeah. And, we're talking about maybe, Ray always mentioning Airbnb seems easy to him, and he loves it. And everybody a lot of times maybe sees Cody's success and thinks real estate is easy. But I also want to dig into Zuber's most recent maybe interview. That's also going to be our topic. Me and Zuber, instead of going through all the comments on all his videos, it's going to be focused on the interview he did with Ryan Pineda and Brian Davila. So I'm not sure if you folks had a chance to take a peek at that video Zuber did. But you guys have any thoughts about them saying no one should be buying real estate or buying rentals? Cody, you have any thoughts on that?
I think when you watch anybody online, it's apparent who's a business person, who's not, and who's a real estate person, who's not. I think it would be more than obvious to state that they are business people, not real estate people. That was clear by the things that they said in response to how Zuber did his model, saying that it's not repeatable. You have to make multiple six figures to get a rental. And they're like, well, I want to be rich today. It's like, well, you're not going to be rich today with rentals. Everybody's in agreement there. But I don't know how that one guy, I think Brian, I don't know how the heck you have 30 rentals over a decade and cash flow nothing. Like, you did something wrong. But there are real estate people and there are business people. And I think when business people rag on real estate folks, when it's obvious and apparent that if you do it over a long period of time, you can build massive wealth, I think that's a mistake. And it reflects poorly, as we saw from a lot of the comments. People don't resonate with hate.
Before Ray maybe puts his little 2 cents in there, I think a lot of it too, like you mentioned, the guy Brian. I think for him, like you're saying, 30 rentals. He's probably exaggerating. I mean, I'm just assuming he's exaggerating. He probably makes maybe let's say he makes 10K, but that for him 10K is nothing, right? Like he wants like where Panetta is making 50K maybe. So for him, it's like I have these 30 rentals and I am making nothing, right? And I think to the other point is how they look at they keep talking about expenses, either water heater goes out or roof goes out, right? And where Dion looks at it at a different way, where the tenants are paying for it, right? So yes, I have these expenses that come up, but if I plan for it, it's actually coming out of the tenants, pockets in a sense, right? So there's different ways to look at it, right? But Ray, so did you get a chance to take a peek at that video?
No, I didn't get it because I was watching the other videos Cody was because you kind of said to me last minute, Mark. But no,
My
but
bad,
just
my
to
bad.
no, but just to kind of go off of since I am in business and I do invest in real estate, I can understand the contrast. And the cool thing is I get to see a lot of these different perspectives with my clients as well, right? Like I was talking to some flippers and investing people who kind of fix and flip properties, right? And things are slowing down. People got a lot of vacancies, and right now, or people are questioning their portfolio, and because this is the rough times, right? But not only that, right? I see a lot of agents who found a lot of success during COVID in that time frame, and now their business is a little slower, and they didn't invest in real estate like some of us do, right? And these slow times are giving them just giving them a lot more difficulty than it should be if they were investing. So I don't know. I feel like for the people who stay in for the long game, like Cody was saying, I think they're seeing a lot of benefits to having a lower mortgage and not having these high interest rates, right? Especially for me, right? Most of my mortgages are like 2s and 3%. I did my subject two. That's like a 3.25, right? Like my interest rates are low, my payments are low. So like since Airbnb's slow right now, I'm okay, right? It's not a big deal. And I hope everybody kind of looks at real estate that way, so they're not stressing.
So a couple comments from that video. Like Gus is saying, dude, Brian sucks at investing. LOL. Yes, to Lynn's point. So the interesting thing also is right. So Lynn says 30 rentals and 10 years, maybe zero cash flow, but has a course that teaches you how to make money with rentals, right? So make it make sense, right? So I think that's the frustrating part too, is this Brian individual, I believe, has a course on how to invest in real estate, right? So I think that's the part people are like, man, how these influencers out there, like who do I trust, who do I believe in, who am I supposed to connect with? And I think that's what draws a lot of people to the one rental at a time community. So those are a lot of the questions or comments we'll dig into. People messaging Zuber, saying that they're glad they found him. Some of them said they found Dave Ramsey, and Dave Ramsey cost them this much money because they were trying to pay cash for everything, and by the time they saved that money, they've lost out on so many opportunities, right?
Well, I mean, on that note, the problem is not Dave. It's that they're listening to too many people, right? If you listen to Dave and you listen to Robert Kiyosaki and Ken McElroy and Zuber, you're not going to know what to do, right? And so the mistake there was listening to too many people. You got to pick one, because if they had waited and waited and waited and paid cash for a duplex, they would have been happy. They would have been okay. But because they listen to all these other people that leverage into situations, they're playing the comparison game and hating their life. That's their fault, right? You got to pick one and stick to it. Devise a plan and follow it. So you could be a debtor or you can be a cash person, but don't be in the middle. That's a terrible place to be.
See, always learning from Cody, man. He's much wiser than his years. But let's see. What else? Oh, Marlon RE says Brian was summed up as a salty Section 8 landlord. Yeah, but I think the one big takeaway And if anyone hasn't seen it, I would definitely go watch that video. But it was how Zuber was very composed. I was very impressed at his composure in that video, and it took a lot for him, I think, not to say certain things to Ryan and Brian. But Brandon says yes, flippers and wholesalers get conditioned to getting their results immediate, high time preference. Yeah. Long-term real estate buy and hold investors have a low time preference. Yeah, very true.
Oh, I wanted to ask Cody. Cody, are you still doing flips for like single family home flips kind of stuff?
I've done a few, but that's not the problem I have is there's no amount of flips I could do that would bail me out of my existing problems. And I mean that, I truly mean that. I've done the math. It doesn't work, right? It's the idea of trading time for money. I built a business where there's no amount of time I could trade for money or flips I could coordinate on single family that's going to fix my problems. And I passed 8 figures worth of debt on my portion, not like the gross real estate holdings, but just on my portions north of 8 figures. The amount of flips, even if you're making 100 grand a flip, to bail out of that debt after tax is stupid. Like it's not possible with the pieces that I have. So my main focus, the way I look at getting liquidity events, is what type of deal would I have to buy that I could lever up to pull cash out and have the tenants pay for it. So as an example, buy a deal for $2 million with the goal of how could I get it to be worth 3.5 and get a loan for 2.5. So I could get a $500,000 liquidity event tax free. What would I have to buy? And what would I have to do to that asset in order to get that $500,000 liquidity event? And then how would I fund the purchase? Because I don't have the money to buy it. So it's playing the game entrepreneur, but that's more fruitful than trying to bang out 20 flips or 30 flips, because the $500,000 tax free is the equivalent of making probably 800 grand. And so it's like, if I can make 50 grand a flip, that's 16 flips versus one deal. I just have to find one deal that can do that. So I create the buy box for that. I'm selling a flip right now. I'm under contract to sell it. It's actually 30 days from today. But other than that, I did that with a friend. Like I'm just focused on those types of deals where I can do the cash out refi on things I don't own today, and then have the rental, the net income support the debt so that I'm not taxing my current portfolio.
I think it's super cool, man. Like, your problems are massive, right? But you're such a problem solver, right? That you can look at that type of situation and be like, all right, I'll find the money and then I'll convert that asset to pay the debts that I have. And for you to be able to say that and to have the kind of confidence that you do, that's the entrepreneur, right?
Well, you have to figure it out, right? And like, to give actual numbers, I have like 34 months to come up with $1,850,000. I haven't shared that publicly before, but like I have less than 3 years to do that. And so some of that, it's not proportional, but some of that's due this year, some of that's due the following, and then there's like 700 and change that's due the last year. And so can I earn that after tax? I don't think so. I don't think there's enough flips in my market, and I don't want to venture into a new market because that's how you get burned. That's why that Brian guy was, they're all scattered all over the place, right? That's a recipe for disaster. So I don't think there's enough opportunity in my market for that. So I have to figure out a different answer to the same problem. And it's probably going to be converting that $1.8 million and change into real estate backed debt on assets I don't own. Because if I did it against the assets I do own, I'll be over leveraged on those assets.
Cody, I applaud you, man. Like, I think most people would crumble against that type of pressure, right? And I feel like when I talk to entrepreneurs, those are the type of people I love being around, right? There's nothing, you can't put your back against anything. It's either you're all in or you're not. And those are the type of people that I resonate with, you know, and you know, I'm just super impressed. Like, you know, I think should everybody should look at that and be like, wow, that's the type of person that can problem solve such significant tasks. You know what I'm saying? So I just applaud you, brother.
Brady. Well, we'll go with Gus first and add in Brady. But so Gus says, I'm sorry. Like maybe he didn't hear what the problem was, Cody, that you mentioned. But then Brady also adds in, how often can you find that 2 million to 3.5 million value add multifamily deal?
Yeah. So to start off, yes, basically what I did is I built a portfolio of a few hundred rentals. I'd done RV park, I flipped single family, but I bought a bunch of units relative to the money I had. And then to get out of those partnerships, because I had to get out of the partnerships. Some of them were toxic. I got bought out of some at losses just to walk away. And the other ones, I didn't have the money because I sold out at losses. So I seller financed out the partner. So let's say I have a 50-50 partner or a 40-60 or whatever it is. I get 100% of the LLC in exchange for a promissory note. So my partners seller financed their position on notes. Problem with that is those partners want money sooner than some of these seller finance deals. So I got 100% of these deals for nothing. Capital partners got seller financed out. Well, I've got about $1.8 million and change that I have to pay off in less than 3 years. So like 500 change this year, and then some money the next year, and then about 700 something the last year. So it's a lot of money relative to my income because I don't have a job. I actually don't have any active income. It's 100% from the investments I make. So that's my problem, is converting those obligations into real estate mortgages. But the parameters I set on myself is I can't tax the existing portfolio. I have to go find something else that can pay for it. Because if someone else pays for your stuff, you don't have to have any money. I never have any money. So that's the way I live. As far as the other question from Brady, how often can you find the $2 million deal that goes to 3.5? Pretty often, but sometimes it has less zeros. So as an example, I bought a deal for 2 million and within 2 years it appraised for 3.8. That deal was listed for 13 years straight. So everybody and their sister had seen it. It's been on the market forever. Listed when I was 8, bought it when I was 21. But I've also done smaller deals. I bought a 12 unit for 680. Got it to appraise for 1.4 million. That took 3 years. But that was also on the market for over a year. Nobody bought it. More recently, about 7 months ago, I bought a 8-plex for 430. Today it's worth 800,000 and change. 3 months ago, I bought a 6-unit, 115,000. Today it's worth closer to 375, 425, 375 on the conservative end. I'm working on getting a loan on that for 250. It scales up and down. Like you don't have to get a silver bullet. I've never to this day gotten a silver bullet where that deal is going to solve every problem. But think about it like this. I bought an asset for 115, cost basis 150. Say it's worth 375 to 425. Let's call it 4. I get a loan for 250. So after fees and stuff, I get like 90 grand tax free because there's going to be some fees on the loan. 90 grand above cost basis. That 90,000, while it's not the 1.8 that I have to solve for, it is 5% of the 1.8. And so now I'm 1/20th of the way to my goal. And the property that I bought for 430, I'm in at 470. That's worth 800. Get a loan on it for 550 is where the cash flow will debt service everything now. And after fees, I'll pull out 60 to 70 grand. And so slowly but surely I start chunking through these obligations. The deal I bought for 2 million that appraised for 3.8, I got a loan on it for 2.5. So that's a real example of one that I did with those numbers. But I pulled out the money for the original capital partners, and I pulled another $500,000 tax free that was above cost basis, and I used that to upgrade the building and pay down debts. And I actually used little amount of that money. I paid off my cars. went personal debt free. So moving those obligations to a property and now finding the next one. But you can find them. And every deal that I've done that on sat on the market for an extended period of time.
I just want to say Flavio is getting upset. He says I'm not reading his comments, so he's text messaging me on the side. So I better read one soon. So he does say, I don't see much flips in my area. People rather do a burr. So how close is Grandview to where you are, Ray? That
I think it's like 2-3 hours or something like that.
Yeah, it's about 2 hours from where I'm at.
And then Flavio, like I tell everyone, Flavio is a sleeper. He's doing a lot more stuff than he leads on. So when you actually talk to him, he has a lot of stuff going on. I know him and Cody had coffee a few weeks back. So, but Lynn also this is a great point. I think a lot of people don't realize. So if you don't know Zuber's entire story, but Lynn does say, I also learned that Zuber built his real estate empire while making $400K a year from his W-2, probably around $600K in today's money, which
Crazy.
allows to manage my expectation, right? So I think a lot of people, yeah, they do feel like maybe they're behind or they're not doing enough, but I mean, I don't want to take anything away from what Zuber did, but the fact that he was making, 400K a year at that time was probably very helpful in him growing his portfolio.
Yeah, maybe if I had success like that in a W-2, I would have stayed.
Yeah.
But I mean, to be fair, like you don't need that.
Yeah.
It's different magnitudes of goals. Does everyone want to be where Zuber's at? No.
Yeah.
Not everybody wants that. Some people want just to have 5-10 grand a month in cash flow. So why would you have to make 400 grand at a W-2 to get to 5 to 10 grand a month? You don't.
True.
So you play with the pieces you have. He played with the pieces he had, and he grew it to X amount. But whatever you get exposed to is going to really determine where you go and what you want. And a lot of people don't want that.
I love that you said that, Cody, because like exactly right. Like, I resonate a lot with Dion. You know what I mean? I don't need Lamborghinis, crazy mansions. You know what I mean? And I think a lot of people can resonate with what Dion's story is. So, yeah, I think there's a humble number that everybody can come up with, and you don't have to make your whole life about real estate. It could be about all the things that you want to go do and enjoy.
Mm-hmm.
Brannon says compounding versus extraction, long-term hold versus sale. The choice and the results reverberates through the decades and centuries. Jim, I believe he's tuning in from your channel, Cody. I also want to let everyone know, Jim, I did put his YouTube channel in the chat. He did blame Ray for bullying him into finally starting one, but Jim's channel is now started. He's putting out content, and he also started a new accountability call in school on Sundays. It's a contractor call, so if you haven't checked that one out, that was they had their first one yesterday. You can probably get more contractor information, burrs, probably bring inspection reports if you want them to kind of go through that, but definitely check that one out. But Jim is saying, so what does the plan look like for that? Cody purchase more properties, do flips to be able to pay those off?
So there's a couple things I'm working on. In addition to the new acquisitions that I haven't shared online yet, but it's in the background. I'm working on some 1031s, and I've lined up some larger off-market opportunities to 1031 into that are seller finance, like 2% down. And like very little down payment. It's going to pay closing costs, and that's it. And we're like mid to high 7-figure purchase price to low 8-figure purchase price, very little down percentage wise. So what I'm looking at is potentially selling my portfolio at a slight discount, but stacking those obligations, if I find a buyer, stacking my debt obligations against title on my current holdings, and then 1031ing a tiny little bit of equity percentage wise into that massive deal that is highly leveraged seller financed, because I do that debt payoff and then I get the tax free or the tax deferral on my 1031. So I would knock out the 1.8 million in debt and still have the minimal down payment on the massive seller finance deal so that I don't pay any tax on it. And I knock out the debt obligation. I get into a new deal that'll cash flow. That's my master plan. We'll see how close I actually get to it. I have to find a buyer, but I could knock it all out this year if I find a buyer at discount prices, like discounting my appraisals 10, 15 plus %. I could put the debt against the title, take a little bit of cash, buy the highly leveraged seller finance deals, and effectively have no tax obligation and knock out the debt. That is one solution I came up with, but that is the contingency of actually finding someone to buy my stuff. So we'll see.
Cody, I want to ask you, like, you know, being an entrepreneur, you know, like, I feel like when things are the hardest and the most difficult, that is when I get the most growth, right? And I don't know, I like, do you get somewhat excited? Like, I know for me, when things are hard and I really got to test, you know, what I'm built, how I'm built, if I can make it, I get kind of excited. You know what I mean? And I'm just curious, like, what are your thoughts?
Well, yeah, it's exciting. And right now is a very expensive time. I'm doing a lot of CapEx right now. It's multiple 5 figures a month in upgrades.
Yeah.
And no matter how much my portfolio cash flows, like I'm not going to be able, like right now, I can't afford multiple 5 figures a month in upgrades. So like, it forces you to figure it out without taking on massive amounts of debt. Like I don't have personal debt. So I'm trying to stay out of that just to keep doing this. But I can turn that switch off, but I'm trying to make these properties as nice as possible, because the nicer your assets, and the harder I work to do it now, the easier it's going to be later. And so the creativity flows, like you mentioned, when it gets hard. And I'm excited for the other side, because the other side of this, when I'm not spending 20, 30 grand a month on upgrades, it's like 20, 30 grand of benefit. You know, it's right there. So that's exciting. But right now I'm staying very cash strapped, staying out of money.
Yeah.
And I think that'll be very rewarding long term.
Cool.
I don't want to take up too much of your guys' time. We've been going for about an hour. Probably wrap it up with a few more questions that I see in the chat. I do see one from Harrison, TradeBetter99, says, Cody, how do you vet investment partners? Is there a certain return you're looking for?
I mean, there's not a return I'm looking for. I mean, I do my deals and I'm an infinite return. And I'm not taking on new partners right now, because I just got out of the really bad partnerships and the mediocre partnerships. So I'm not excited to jump back into one, but a partner has to be willing to let me drive the boat. Like I'm not letting them steer, because when I let past partners steer, we hit the rocks. It wasn't good. Have you ever heard the saying, like, you need a mentor or a partner like a lighthouse? If you go towards lighthouse, you hit the rocks. And you got to have someone that knows what they're doing steer the boat, is the bottom line. Because otherwise, people make novice mistakes of going towards lighthouse and they hit the rocks. So I've had partnerships where they wanted to be in the driver's seat, and what ended up happening is the partnership failed, because one person knows what they're doing and one person thinks they know what they're doing, and the person that thinks they know what they're doing has to be right. I've seen that more often than not. And so if I were vetting a partner, they'd have to be willing to give up the control and trust in my ability to run the deal. What I found on most of my deals is the typical returns are north of 30% a year, but that's not why I'm buying it. I don't really care about the actual measured return. I care about becoming an infinite return. So like money goes in, how quickly can I get the money out? And then let's not touch the equity again. Because once there's no money invested and you get a return of $2 grand a month, $5 grand a month, $1 grand a month, whatever it is, it doesn't matter what your return on equity is. You can get 4%, 2%, 8%. It's like, it's theoretical equity. It's made up. It's not you don't have any money in it. So that's what I try and do with my deals, and how quickly can I get the money out for the partner or for myself.
All right. Let's see. Maybe yeah, Gus makes a great point. A lot of people who would have made 400K to 800K like Zuber would have just been happy, right? They wouldn't have saw the bigger picture, and might have just the W-2 might have been what they were relying on, right? So that's a great point too, I think. Let's see. Was there one more? Yeah, Zuber touched on his ideal portfolio. Hey, what's up, Andy? I know it's cold out there, definitely in the Northeast. Yep. So Brady also agrees with you. I don't do partnerships because I like to have 100% control. A partner kills good decision making. So, um, yeah. Anything else you guys want to wrap it up with? I mean, like, it's a good episode. I think if anyone hasn't had a chance, definitely go check out that video Zuber did with Ryan Pineda and Brian Davila. It's very, like I said, he was very. I was more impressed with how Zuber handled himself. I definitely think he wanted to pick someone up and slam them on the floor at points, but he did a great job. Vegas is right around the corner. Both of you will be there. Cody's kicking off day one on Saturday. I believe I just heard Zuber say there is 15 tickets still available. People haven't got their tickets and they have maybe planned to change and now they can attend. Cody, you remember how much teenager spots? I think he said 5 today. I could be wrong, but I know there's a people.
I thought he said as many teenagers want to come.
Okay.
Yeah.
You got a lot of patience, Cody.
It'll be fine. It'll be a lot of fun. I think we're doing that on the first day, so that'll be good.
On Saturday, or
I think so.
Oh, okay. All right. Oh, so it's not gonna. It's like gonna be in the back, or it's not gonna be like a separate. You're not planning yourself then, right? You're gonna have the teenagers there at the event itself and have a kind of talk to them, or
I think so.
Oh, okay.
I think that's what's happening.
All right, very cool. Charles McCune says partners want helicopters. Yeah, we'll wrap it up with something fun real quick. Then I know Ray, I think you went to some RV thing recently,
Yeah.
right? Checking out some new maybe purchase or just ideas, right? So, what was that all about?
Yeah, my wife and I, this is gonna be our third season into RVing, and dude, we just love like just checking out what people are doing, what new ideas they're coming up with. You know, we don't generally like big RVs just because I feel like in RVing you break down, right? And if you got this huge fifth wheel, bro, it's a freaking chore to get that, to a place to get repaired or get your truck repaired. So we personally like 24 feet or shorter kind of RVs, just because you could pull it with a half ton if you needed to, and you could go to Enterprise and rent that, right? For us, it's really about the journey, and we love all of it. So that's why we go. It's just fun to kind of check stuff out.
Josh Burdick says those RV people are crazy. I don't know if he means the people at the event or just people that do the RVing. But like I said, go check out Cody's channel, subscribe, like there. We're trying to get his watch hours up, so we'll get him there. We'll get Ray's channel moving a little bit more. But everyone, thanks for tuning in. It's always fun getting Cody on. Ray's always a great source of information. Also, Ray is doing, actually both of them have a calls on Saturday. So Cody has the Gen Z call Saturday morning, and Ray has the, call it O-Strat, right? One short-term rental at a time, right? So that call goes on Saturday also. And everyone, I'll be back tomorrow with Brandon building wealth flow. So thanks for tuning in, everyone.
Bye, guys.